Hey guys, we're back with another quick episode of the Crypto Yield Curve podcast. Here with me is Gaurav, and I'm Jason, and we're building Rio, a fixed rate lending protocol on Ethereum and Base. How you doing?
Good. How are you?
Good, good. Um, and we didn't really have a topic for today, but saw some interesting announcements and figured we would just quickly riff off of those. So let me just share those announcements here. And one was Gnosis, and they basically posted a thread um, about their roadmap and building the banking stack, essentially, enabling us to build better banks or fork banks. And they had some tricky wording, not banks, but fork banks, and so forth. Um, and the other was Aave announcing their Aave app, and I think there were a couple really big takeaways from this little teaser that they posted. One was balance protection, so insurance on the money that you've deposited. And the other was just how seamless they are making it look to deposit from a bank, just connect your bank, deposit to Aave, start earning, see that yield accrue in real time. And it seems like from this short teaser that they've really focused on abstracting away all the complexities of choosing a chain and having to figure out how to deposit and so forth. So this seems to be, click to connect your bank and start earning on Aave, and your money's insured and safe and so forth. Um, and as Mark has claimed, Aave is becoming a bank brick by brick, and I think that this is a really interesting vocalization of a trend that we've seen um, being played out in DeFi, where we've kind of saturated like the DeFi native retail audience, and DeFi protocols have started to ask themselves, okay, what do we need to do to onboard the world, the actual retail to crypto? And, there's been a lot of focus on wallet abstraction and, multi chain and making it easier and dropping the barriers to entry and friction points, so that this really becomes a seamless experience for anyone in the world, right, to use DeFi and transact on DeFi rails. But at the same time, this is very, very different than early DeFi culture, right, where everyone was excited to decentralize, cut out banks, do take control of your own finances, and um, be the one responsible for your own risk management and be responsible for any losses that you suffer and so forth. So I think it's an interesting time and a nice opportunity to reflect on uh, you know where DeFi is going, what it's become, and so forth. So yeah, I'll pause there and open it up for your thoughts, Cor.
Yeah, I basically agree with everything you say. On the topic of Gnosis, um, they've been one of the most underrated teams in crypto. They just ship awesome products one after the other, and they don't get a whole lot of um, credit, widespread credit. And they don't really. I don't think a lot of them have gotten rich from their token. And so they do a great service for crypto. Like the Gnosis Safe is probably like one of the most widely used products in all of DeFi. Then CalSwap, just awesome aggregator, whatever you want to call it. Um, so um, yeah, good job to them. On the topic of Aave, my mental model for them has always been a bank because in a different way than what they're saying today in today's announcement, but I've always thought of them as a bank because they do their own risk assessment, whereas something like Morpho is infrastructure or a protocol, not a bank. And you know, banks can be built on top of Morpho, but Aave is positioning themselves as an actual bank and always has. And I guess today's announcement is a little bit different in that they're not talking about how their protocol is set up, but they're reaching one step closer to the customer, um, which is great. So, a few thoughts. So, number one, it's interesting what you say about decentralization and how this is like nothing to do with decentralization. And crypto and DeFi was all about decentralization. I remember a few years ago, I think Stani had announced, the founder of Aave had announced like some separate user flow or user path that was completely KYC'd, and everyone freaked out. And the idea being that this is crypto, we don't need KYC. What are you doing? And I don't think that kind of sentiment exists today with this hardcore decentralization preference. And I think in many ways that is bad. And when you don't have those decentralization maxis, you get blowups like Stream Finance. Like where's the Chris Bleck of this cycle, right? Where's the guy calling this stuff out? On the other hand, I think it's inevitable that if you want to get all the trillions of dollars on chain, you're going to have to, um, you know, uh, diminish the role or the messaging of decentralization. And I think in the ideal world, you can do both. You can have centralized paths, and you can have decentralized paths, and the user makes the choice based on his comfort level with being on chain. That's number one. Number two, um, I think the potential growth vector here is huge. Even Europeans, like as someone who runs a DeFi protocol, even in the first world in Europe, there's people who only want payments in USDC, not euros, not whatever other native currency. And so I think we're trending towards a world where every person in the world has access to USDC yield, and meaning their savings are in dollars and their yield is denominated in USDC. And if that happens, obviously the actual yield will diminish because it has to be spread out over much bigger, much bigger capital. But I think that's where things are headed at the moment. Um, and we'll see what the long term outcome of that is. The financial and the balance sheet and all that for the U.S. government and the treasuries and so forth is pretty bad, but it's likely that most of the world is worse. So uh, I think that the flows are going to go into USDC, and it puts the dollar into a very powerful position. It continues to be in a very powerful position. And number three is, I think one of and maybe an unintuitive um, entity that starts to get worried about this is Coinbase. In that a lot of people I know hold their USDC on Coinbase or hold their dollars, let's just say dollars, in the form of USDC on Coinbase because Coinbase gives basically a treasury's yield, whereas the Bank of America and Wells Fargo doesn't. And I think even some of their messaging has been to that extent. We'll give, they call it rewards. keep your money in Coinbase. Like they're basically saying we're a bank where you can earn a yield and you can do a bunch of other stuff. And Aave is now encroaching on that. And on Aave, obviously, you can't buy and sell crypto, but there's a famous saying in Silicon Valley. I forgot who said it. I think it was the one of the guys who started Netscape with Mark Andreessen. I forgot his name, but there's basically two types of businesses in in technology: those that in software, those that bundle and those that unbundle. And in a way, what Aave is saying is we're unbundling the yield aspect from Coinbase, where the end user connects his bank and just gets the yield. We don't care to provide token swaps or trading or anything like that. And I think it's a huge move. I think it's very powerful.
Interesting. Yeah. And you brought up KYC and such there, and there's some really interesting stuff happening right now on the privacy side with like Aztec just launched their fundraise with ZK Passport, right? So you can prove that you're not a citizen of some blacklisted countries and still participate without revealing your identity to them or the world. So it almost feels to me like this older DeFi ethos is just kind of staying up with the leading edge of cryptography and technology um, while these existing DeFi protocols are just maturing to the point of needing to make it simpler for the rest of the world to use their products. And yeah, I agree. I think it's a good thing. And when I first got interested in free market economics and so forth, one of the most exciting aspects of just thinking about, okay, what's the future going to look like, is that when you play it out, a free market will keep the best of what exists already and provide additional newer value on top of that through better exploration and better incentives and so forth. And centralization is not a bad thing if the incentives are in the right places. And um, you know everyone in the world doesn't want to be spending half of their time doing risk management and doing a deep dive into what's how safe these collaterals are that this protocol that you have some exposure to has invested in, and like that's not the future. So yeah, to me it's pretty exciting to see uh, the the kind of old cypherpunk values still alive and well and focused on privacy and private access to yield and so forth, uh, while we see these big protocols like Aave make an awesome app that's probably going to be very simple to use and give you access to something that you didn't have access to previously.
Right, and the ZK part that you mentioned is pretty interesting. So, if I understand you correctly, I had said that there may be two paths for the user. One is completely decentralized, on chain, and so forth, and the other is more of a KYC regulated, etc. But you're saying there may be a third path where even through the KYC level, you still retain a lot of the benefits of being on chain and decentralized in the form of privacy.
I just drew this morning, and it kind of seems like this is the high level trajectory that DeFi has coursed through, right? Like first it was DeFi, not banks, decentralize everything, be in control of your own finances. Now we're seeing a reconstruction of banks and trying to take the best of what banks offered and make them better, and still have users retain some control, right? So it's almost like a merging of the existing TradFi models with some of this DeFi ethos from before. And then, yeah, I think there's like on the leading edge of tech, there's going to be these newer offerings, right? So private DeFi, private access to yields, where you're not only in control of your keys, but also in control of what information is published and accessible about you and your finances. And then we'll probably see a shift from that towards, these more comprehensive offerings where you get private access to yields and you're in some control of your money. And, that gets bundled with insurance and other great offerings like that.
Cool. Totally agree with that.
Cool. We have a great opportunity right now on Rio to earn close to 10%. And that includes 5% of bonus yields in USDC. Um, and you also get access to term premiums via fixed rate lending. And this is really something that doesn't exist elsewhere out there in DeFi at the moment. So go check it out and let us know what you think. And yeah, that sums it up.
Sounds good. See you guys next time.
Bye.